You ever see those headlines that just make you scratch your head?
Oh, definitely.
Yeah.
Like, how can two completely opposite things be true at the same time?
Exactly. Like a huge company, say Spotify, announces record user numbers, tons of new subscribers.
Yes, sounding good.
But then, bam, they also
Yeah,
report a surprise net loss. It just feels weird.
it does. And that's exactly what happened with Spotify's latest results, right?
Mm,
Dropped July 29th, 2025.
that's the one. Okay, so let's unpack this a bit. For today's deep dive, we're looking squarely at Spotify's Q2 financials,
Right.
trying to figure out how these, seemingly contradictory numbers actually fit together.
And what's fascinating here is exactly that contradiction, isn't it?
Yep.
It's not just about the big, shiny user numbers.
Yeah.
Our goal really is to look underneath, understand the forces driving these numbers. What's the real story?
Precisely. So our mission, if you will, for this deep dive is to pull out the key insights from all the reports and analysis we've seen, MarketWatch, Barron's, Investopedia, Music Business Worldwide, the lot.
Get the full picture.
Yeah, figure out what's really happening inside Spotify, why it actually matters, and, what it could mean for you.
Sounds good. Let's maybe start with the good news first, because operationally, things looked pretty strong.
They really did. I mean, from a user growth standpoint, Spotify knocked it out of the park in Q2. They beat their own forecasts, beat Wall Street estimates. Monthly active users, MAUs, basically anyone who logged in at least once, hit 696 million.
Wow, 696 million.
Yep, that's up 11% from last year. And premium subscribers, they jumped 12% to 276 million. Also better than expected.
That user number is just staggering. How does that stack up against other big streamers? Does it tell us something about their place in the market?
Oh, absolutely. It really underlines their dominance. Just for perspective, think about
Yeah.
Netflix. They're around 310 million subscribers, maybe a bit more now.
Right.
So Spotify's MAUs, nearly 700 million.
Hmm.
It just shows the sheer scale. They still hold something like 65% of the global streaming market. Huge.
Okay, dominant market share. And it wasn't just users. Their gross margin improved quite a bit too.
Ah, okay. Tell me about the gross margin. That sounds important, like a sign of efficiency.
It absolutely is.
Yeah.
Yeah. It improved by about 227 basis points compared to last year.
Basis points. Remind us.
Right, sorry. 1 basis point is just 1/100%. So 227 means margin went up by 2.27 percentage points,
Got it.
reaching around 31.5%. And yeah, that's a pretty significant sign. They're running tighter, getting, more efficient in delivering the actual service. Suggests they're improving profitability on the core offering.
Okay, so let me get this straight. Record users, check. Improved margins, check. Dominant market share, check.
Yep. All's good on paper there.
So where does an investor even start looking for the cause of a pretty dramatic net loss then? What did the reports flag?
And that right there is where the plot thickens. Despite all that good stuff, Spotify reported a net loss of 86 million euros.
86 million euro loss.
Yeah, which works out to about 0.42 per share. And that's a massive swing from the 1.33 profit per share they posted just last year.
Wow.
And it completely blew past what analysts were expecting. They were hoping for a profit, maybe around 1.8 euro and 1.98 per share. So a big miss.
A huge miss. Okay, so what were the main culprits? What drove that swing from profit to loss, according to the sources?
Well, the reports point mainly to two big things. First, a 116 million head hit from something called social charge payroll taxes.
Social charge payroll taxes sounds specific, more than just regular salaries.
Yeah, exactly. These are specific employer costs, like for Social Security or benefits, but they can jump around based on things like employees exercising stock options or changes in local tax laws in different countries. It's not just about hiring more people.
Okay, that makes sense. And the second thing?
Second was a currency headwind, about 104 million euro.
Currency headwind, meaning the exchange rates just worked against them.
Pretty much. Like a weaker dollar or other currencies fluctuating meant their earnings from outside the Eurozone were worth less when they converted them back. So those rising specific employee costs plus the currency impact really weighed things down.
Got it.
And you saw it elsewhere too, like revenue grew 10% year over year to 4.19 billion.
Which sounds good.
But it actually missed the estimate of 4.27 billion. And operating income was 406 million, also below the 480 million forecasts.
Okay. So great user growth, but revenue and operating income didn't quite keep pace. And these specific costs and currency issues pushed them into that net loss. That's the bad news side.
That sums it up pretty well.
So how did the market take all this? What happened to Spotify's stock, and what are they saying about the next quarter?
Well, the market reaction was, let's say, not positive. Pretty swift and negative, actually.
Okay.
Spotify shares dropped about 6% in pre-market trading right after the news broke.
Yeah.
And that basically stopped a really strong run they'd been having. The stock was up something like 57% for the year before this.
Ouch. So the rally hit a wall.
Yeah, some reports even had it down 7% to 10% on the day itself. And looking forward, their guidance for Q3, the next quarter, also seems a bit soft,
Meaning?
meaning their own forecasts are lower than what analysts were hoping for. They expect revenue around $4.2 billion and operating income of $485 million, both below the consensus estimates.
That suggests those headwinds, the costs and currency issues might stick around for a bit.
That seems to be the concern, yeah. That Q2 wasn't just a one-off blip.
Right. So beyond just the numbers themselves, did the analysts, the sources you looked at, seem divided on what this means bigger picture? Are some more worried than others about Spotify controlling these costs?
It's definitely a mixed bag, which, often happens when you get these conflicting signals, strong users, weak profit.
Sure.
You had analysts like JP Morgan, for instance, saying they're sticking with an overweight rating. Basically, they still think the stock will do better than the market average,
And their reasoning.
pointing to the long-term strength, that massive subscriber base we talked about. Hard to ignore nearly 700 million users.
True. But the flip side.
While other investors, other analysts are clearly getting nervous, worried that margins might stay under pressure because of ongoing compensation, costs, those social charges, and the FX issues,
Yeah.
foreign exchange volatility.
The currency swings again.
Exactly. It really just highlights how even a company leading the market like Spotify with that huge user base and market share isn't immune. They're vulnerable to these very specific financial pressures that maybe aren't always obvious on the surface.
Okay, so let's try and wrap this up. The core takeaway from this deep dive seems to be this. Spotify in Q2 2025 is, well, it's a really interesting case study.
Yeah.
You've got really strong operational growth, fantastic user numbers, subscriber growth, but it's running right up against these very specific financial headwinds.
Right. Particularly those employee-related social charges and the big impact from currency fluctuations. It wasn't just general costs going up. It was quite targeted.
Targeted, yeah, that's a good word for it.
And if you connect that to the bigger picture, what does it tell us?
What does it tell us?
Well, I think it shows that even these huge market-leading companies, the ones with amazing user growth, can still be tripped up by, internal cost pressures hitting at just the wrong time, combined with external things like currency swings.
Things outside their direct control almost.
To some extent, yeah. And the real lesson maybe isn't just cost matter, we know that, but it's how even these hypergrowth firms can get caught by very specific, almost like non-operational financial things. It shows how fragile even a big market share can be when these factors line up. Success isn't just about user numbers. It's also about how well you manage all the messy details of expenses and navigate these complex global markets.
Okay, so then bringing it back to the listener, what does all this mean for you?
That's the key question, isn't it?
Maybe think about how these kinds of financial realities, this pressure on the bottom line, even with growth, how that might eventually influence the services you use every day.
Right. Could it affect the features companies decide to invest in? Or maybe, the potential for price changes down the road?
Yeah, as companies like Spotify try to walk that tricky line between just growing really fast and actually building sustainable long-term profitability.
Exactly. It's a tough balancing act.
Definitely something for you to mull over maybe next time you're queuing up your favorite playlist.